Hi folks, this is Craig, the options linebacker. This is the weekend report for Sunday, May 1st. Let's take a quick look around the index charts. We'll start with the Dow on the left-hand side, the transports on the right-hand side. These two charts are used for Dow theory. A week ago, we weren't sure what was going on because the Dow was sprinting higher and making higher highs and higher lows, but the transports were lagging behind, so therefore we had a non-confirmation between these two charts. But the transports have caught up, apparently shrugging off higher gas prices, which is kind of what it did back in 2008 before we had a big downside event. On the high beta indices, the NASDAQ and the Russell 2000, we have both of these showing higher highs and higher lows, higher highs and higher lows on the Russell 2000 as well. But what's interesting is when we look at these two charts on the higher time frames, such as the monthly chart, we can see here that the NASDAQ index is now just marginally breaking above 2007 highs. And really, if we look at this chart, there is no overhead resistance until it gets up to just over the 4,000 area. So this is a complete playground for the NASDAQ if it wishes to take advantage of that. There is just no overhead supply on the NASDAQ whatsoever right now. And if we want to talk about overhead supply, then we just go to the Russell, and the Russell has no overhead supply. There's no overhead resistance. The Russell is now breaking into all-time highs. After just being crushed during the 2008 crash, it's come sprinting back to literally more than double itself and jump right back up to now being in a uptrend on the monthly chart. Again, confirmed uptrend with higher highs and higher lows, breaking well above the all-time highs in 2007. Now, those two charts can be quite eccentric at times, so let's go back to the S&P 500 monthly chart and kind of get a more well-rounded grounding for what's going on in the stock market today. Well, no surprise here. When we look at the monthly chart, we're still in a primary impulse wave uptrend, and all of that action that we saw over the past couple of months has really just been a blip on the monthly chart. We're still being pulled to the north by the monthly chart. That is a larger time frame that's having a much greater influence over the charts right now. But where we're getting the most information is actually the weekly chart on the S&P 500. Let's take just a minute here to look at the wave structure of how the S&P moves in terms of waves, and it moves in and out. And I don't want to get too deep into the Elliott wave stuff here because, to be honest, I'm not an Elliottian. I just know the basic structure. I really don't want to know it any more than that because it seems like the people that go too deep into Elliott waves see things that really don't exist. And so what I'm looking at here is just the 5 wave structure here. 1, 2, 3. And 3 is the big wave here, and which is almost the case. And wave 5 was much shorter, which makes sense. And then we had what we call an ABC correction into the summer, and then we start with the first wave up again. Kind of a short, stunted wave. Made everybody feel that this thing was going to roll right over. So this was the big pivot point here, which was right around the 1st of September, which was coincidentally, it's almost like the Fed understands Elliott wave because this is when they announced at Jackson Hole QE2, and that gave a huge lift to the market, 304 points to the upside. This, I'm counting, is the wave 3 to the upside. That all makes sense. Wave 3 should be the larger wave. And what we saw in February and March was the wave 4 down, and we're currently in wave 5 up. So that should be the finishing wave for this. Just a question of how far this goes up. My target is going to be anywhere from 1400 to 1440, somewhere in that area. If we do something similar to this 176 point move, we're going to find ourselves up in that area. If we step back and look at this whole pattern, which is right in here, this is an inverted head and shoulders pattern that we're showing, which also gives a target right around S&P 1430 or so. So again, everything's sort of leaning towards the S&P getting up and above 1400 just barely, and then obviously we have some what's going to be probably overhead supply at that point. But you can see that really there is no overhead resistance on the S&P at all in this area. Now, when I say overhead supply, I don't think we're going to have people sitting up here saying, okay, I went long right back here in 2008, in the spring of 2008, and I've sat through all of this just waiting to be made whole again. I don't think that's happening. And that's the typical definition of overhead supply. People that can't wait for the price just to come back up again so they can go into cash and relieve themselves. Okay, that's not happening anymore. Anybody that sat through all of this is not going to just cash out. They're going to hold on to that. More likely, what we're going to see overhead supply at is people just taking profits, saying, you know, boy, we are really extended. Now, if you step back for a second, if you pretend that this is the monthly chart, what we have here is the first wave up, the second wave down, and all of this mess here is the third wave. Now, if we continue our top-down analysis by looking at how much energy each of these fractal time frames has, so in other words, each of these time frames has a certain amount of energy that it can run. We saw that the fractal energies of the monthly chart were completely recharged after going through this corrective period that last spring to summer was just a corrective period. It felt like a bear market all by itself, but really that's the market's job, is to correct and pull back and to kind of walk sideways for a while, gather energy for the next run. So this run is midstream right now and probably has certainly enough energy to get up into the 1400s. And by then, I think we'll see it down in this area. Anything below 35 is suspect. It's running on fumes. Now, when we look at the energies of the weekly chart itself, which is, if you will, 5 times faster than the monthly chart, approximately, what we're going to see is in mid-February, we had an exhausted chart. It had to walk sideways for a period of time. And that's exactly, precisely what it did. It got up to the 60 level again and said, okay, I'm ready to break out. And really, that's what we saw as a result of this last week. So it's in the process now of breaking out to the upside, saying, I've got plenty of room to run. And this weekly swing, you can see that when it's fully charged up, it can run for quite a ways before it is exhausted, which is what we saw at this level here at the end of the year. So the monthly and weekly charts are fully supportive of a continued move up to the 1400 plus area. As we continue to go down in the fractal time frames, here's the daily chart, which again is 5 times faster than the weekly chart. We're seeing that we have an exhaustion condition here. The daily chart has come off the bottom and right now is just about done for. So we may see just a little tiny push perhaps on Monday, perhaps into Tuesday, but then it's going to have to walk sideways to down. It can either walk sideways, that's the longer way to do it. It can retrace, that's the quicker way to do it, or a combination of the both. So we should see something like this happen over the course of the next week. Now, we have a number of strategies that we can play these price movements with. Obviously, one of them is the iron condor that we play. So what we're looking for right now is there's no reason to step in front of this trend. It could motor all the way up to 1400 right now. So we don't have anything that we can sell against it or hide our positions behind until we get up to 1440. So don't want to put any bear call spreads in play on here. So I'm going to wait for some type of retracement. It's very typical to see once the S&P breaks out is it kind of comes back and gives mom a kiss goodbye before it runs away again. So we're going to play those in our higher probability iron condors as well as the lower probability iron condor. We're going to play this move for just a quick retracement as well as the weekly options. We're going to play a bear call spread on the weekly options and then wait for the retracement, play a bull put spread on here, fade both sides, and be able to get profits on them. And I'm out of time, so we'll catch you next week, folks. Take care.